We're gonna go over the trades for today. Trade we took today. All right, this should be updating real soon. Let's start from a higher time frame perspective here on NQ. We're just gonna go down from the lower time frame to the higher time frame, of course, but the timing of when we entered was incorrect here. If we go from a daily time frame perspective here, let's look at it from a power 3 weekly on the candle here. So we open up, move up higher. Now we're moving down lower. Where are we likely to head since we have a potential CRT forming here? First objective should be the 50% of this candle's range right here, 50%, and then eventually the low. If we go down to the daily time frame, what during that range here, we have Friday's range right here to Wednesday's low. Where's Monday's low? Okay, yeah, so Wednesday's low to Friday's low, we have 50% of the range at this daily fair value gap right there. So then if we go to the 4-hour time frame, we also had a sell side objective. So the market clearly looked bearish. It looked bearish going into today. We had a bearish BPR retraced up into it. We had to reach equilibrium to then eventually push down lower here. We formed a bearish order block right there. You can see the market closed below it, opened up, pushed up higher. That's that 10 a.m. candle to what expand lower to target the sell side objective, and of course reach for the daily PDRA, which we are likely to eventually meet very, very soon. On the 1-hour time frame, we had our 1-hour buy side objective up here, which was around London mixed with just a little bit of London close right here, London, ending session right there. And then we had a breaking market structure going into today. So there was no real trade idea here for me to take off of 9:30. So then eventually we waited for that 10 a.m. candle to open up. We did meet this first objective to eventually complete the first market maker sell model objective. And then we had another low right there, which we were targeting. We had this low right here, and then we had this one and this one up there. So clearly the market met it at 11 o'clock. Very, very bad timing for me, I guess. On the 15-minute time frame, though, this was very, very important for me. 15-minute time frame, midnight open. We were trying to enter above midnight open here, and we also had this daily range here we were using. All right, so yeah, back to what I was saying, though. We had our daily range right here, which was very, very important to me since we also had a 15-minute fair value gap right there with the breaking market structure overlapping right there. We did tap up into it, and then we did start to expand lower. I was very fond of it since we already swept this objective right here, and I thought to myself, there's two scenarios here. Either one, the market disrespects this and it continues to the upside and it expands higher. We're reaching for the average daily range, which was right here. Usually whenever the market is trading, potentially see the market reach for the 1/3 of the average daily range. That's just a hypothetical scenario. If you're not reaching for it, or if you already met it, you really can't expect much volatility from the market. And that's what I usually use to see if we have volume or not. If the market is not expanding towards it yet, or if we're yet to reach it, I know we can still have a good amount of movement till we reach it. And if we already if it's very small and the market isn't really meeting it, or it's already met it, I don't expect much volume, going into that day. Same thing with yesterday, really. The average daily range was already met. It was down here. The market was just stalling around, and then eventually we started to dump around, PM session here. Same thing here. We're just moving down later after the session. So we're not really getting clean volatility at 10 a.m. It's 11 or 12. We're starting to get that nice movement. But again, back to the scenario where we took the trade here, that inversion for value gap right here on the 1-minute time frame, and that's where we took this trade. So we took this trade right here. The market inversed, we entered, and then we came back up, went down, came back up, went down, and then we came back down, closed, waked up, and my break-even point was right here. Let's go over this by, basically the trade idea with the, if we go for the one setup for life here, daily bias. What was our daily bias going into today? We were bearish. We were bearish today. Clear drawn liquidity. What was our clear drawn liquidity right here? Range low, aligning with that sell side objective right there. Clear as day. Higher time for PDRA tap. We had a 15-minute SIBI being tapped up into, and that also was kind of our our buy side objective being swept right there for our liquidity sweep. And then eventually SMT, we did have some form of SMT here later on, but not right there for that trade. So boom, that would have been one confluence miss. Lower time from inversion, yes. Lower time from change in the state of delivery, we did not get that. So that was two confluences missed, the SMT and the change in the state of delivery. That's when we got the inversion for value. We never got this right here, which I wish we did. It's very close, very tight. But again, if we don't see strong displacement, if we see this right here, I don't count it. I want to see the market not wick below it. I want to see the bodies close with strong movement like this right here. This is a good change in the state of delivery right here, because the market displays lower. It displaces it breaks structure. Same thing with this one right here. It breaks structure to the downside and it retraces, and you can see we continue back down. But again, the market was in a very choppy condition. It was inside of a range here from this high to this low for a very long time until we broke out of it. And then eventually you can see we were just chopping, hitting equilibrium. And then we started to move down lower. One thing this trade could have done better, honestly, was taking something inside of a more of a premium. We're shorting inside of a discount, which isn't ideal. That isn't ideal to me in the least scenario, like, because the market is bearish. Of course, we want to trade that continuation down lower. But if we were to take a higher quality setup, the market, we should have been trading all the way up here. We should have been taking trades up here off of those confluences. This wasn't bad. This isn't really a bad scenario. The one thing we should have probably expected was the chop, especially after 9:30. The market was just stalling and then went down lower, came back up, started to stall again. And now we're having that strong displacement. We're having that strong movement. Again, I took my one trade a day. I'm following my rules. One trade a day. That's one of my trading rules for this challenge account we're at right now, which I'll show you. So I haven't really been trading it the past couple days. I was trading the wrong account. I won't lie, trading the wrong account. I didn't buy it. This is the only one I bought. As of recently, I traded the one I failed. It sounds weird. I know it sounds weird. I basically was trading one that I failed already. It makes no sense how I was able to continue trading it. But yeah, I was on the wrong account trading that one. But yeah, I did take an L. Was I following the model? No, I was gambling. I won't lie. I was gambling. But my trading rules that I'm following are on my wall. One trade a day, risking only 1% per trade a day. Is it following the model? Yes. If we're following the model, if we have at least, 75% of the model followed, then I'll, consider it following the model. But it should be 100%. But certain confluences aren't going to form. So it's going to be a B plus, or maybe, as long as it's more than of a B plus setup, we're taking it. Was that a B plus setup? Yes, I would consider that a B plus setup. We had a higher time from PDI rate tapped up into. The daily bias was correct. We had a clear draw on liquidity. We had that lower time from inversion, fair value gap. Only thing that was missing was a change in the state of delivery, a good liquidity sweep, since the retracement into that 15-minute SIBI was a good, but it would have been better if we had an internal sweep like ES, which I'll show you right now. This is kind of what I'm talking about. What I'm talking about is right here. This is what I'm talking about. See, the market had a 15-minute SIBI, of course, also, had that 15-minute SIBI. I think this one would have performed the best. But again, we just can't tell. This is all hindsight. Again, people when they're back testing, this is all hindsight right here, this is a really good market condition, because again, we swept all these highs. We're reaching to equilibrium. We're reaching back up into midnight open right here. We're trading basically at a premium, shorting in a premium, which is very, very ideal. We're trading near equilibrium, bro. This is very, very A plus, simply because we had this inversion. We had the change in the state of delivery. We also had SMT at the highs, I bet. And that would have been your trade idea. You put your stops at the high. You don't even want to see the market ever retrace up into this area and continue to the downside, bro. Where's your sell side objective? All this was your sell side objective. Your range low, bro. Clear draw on liquidity, clear target. Average daily range right there also. And you also have previous day low you can target, which can be, your final target. Honestly, you don't even have to aim for a 1 to 3. That could be your final target. If not, then the range low, bro. That is also a good target, bro. A 1 to 1 is still good. I don't know why people try to not justify a 1 to 1. I'll have higher time frame, have higher risk reward. Again, you can either aim for one, higher win rate, or higher risk reward. It's one or the other. Don't try to say, having the highest, risk reward is the best way of trading. No, because your strike rate can be like 20%, 30% and still be profitable. But you can also have a 70% strike rate with a 1 to 1 and be profitable. It just, again, it balances out what type of trader are you. Don't try to listen to other people. Just try to find your own personality in trading, I should say. That's the best way to put it. But this would have been a beautiful trade right here, honestly. And even if you held it, you probably would have not gotten break even. You could have taken a partial right there, let the stops run, and then eventually hit your final target. Beautiful trade idea. Again, internal sweep. This is what I'm talking about. Internal sweep. The dealing range right here, respected. We were reaching almost OTE, reaching to that 15-minute PDA rate, higher time from PDA rate tap, internal sweep, lower time from change, lower time from inversion. The market just cleanly, disrespected all the chop right here, and it just pushed down lower. Beautiful trade on ES. Honestly, this would have been the trade of the day. But again, what do we got to do? Go back, follow the model. Trade inside of a premium when we're shorting of the dealing range we have. If the market did sweep these highs right here, it formed an inversion with a lower time from change instead of delivery. We also had a SMT at those highs. Again, if we follow the model to the tick there, ES would have gave us that A plus trade we're looking for. That's first and foremost. Patience pays. Not taking these low quality B plus setups. If we follow the model to the tick, but knowing what type of setups and filtering out what type of quality setups you're taking is very, very important. This was a retracement type setup where we had strong displacement. We were trading back into the range. Ideal scenario, sweeping these highs, these internal, buy side relative equal highs objectives. to then eventually move down lower. I even said it in my previous video, which you'll see in the 30 trade challenge, where I follow my rules, trading my model, this and that. Basically inspiration from Cole Trades. Talked about how if you just simply follow your trading rules for 30 trades, you'll probably be profitable. So that's what I'm doing. Again, here we did risk a little bit more. I don't know why the brackets didn't fill me in. I did have it at 500, but I changed it. We're going to be measuring the risk. That's why I bought the data and this and that. The logic was pretty well, I won't lie. So let's go back up to the hourly time frame. The logic was pretty well. Wednesday creates a low of week here. I won't be against that to then eventually trade us back up into the range. Again, I see the market trading back up into the range. Here, I'm probably going to be on sidelines since we're going to have like a 4-hour PD array being tapped up into, the daily PD array being hit. Since we're tapping up into that daily PD array, I would look for more longs. This is an ideal scenario. Let's suppose we trade back up and we trade back down. What am I going to be looking for? That lower time frame break and market structure, retrace to then eventually would go back up to that range from right here. So this is what I would probably look for, something like that, and then eventually trade the new range here and look for the market to trade somewhere near equilibrium, form an inversion or change in state of delivery, take that long right here, something like this, and have that trade idea right there play out, something like that. Something like this, have some sort of trade like this play out. That would be the type of trade I'll take. Ideal scenario in a fantasy or something, in a crazy world where we get something like that, where break structure, push up higher, the market, continues back down to the downside for the smart retracement, and then eventually pushes up higher. That's all. Again, equilibrium, trading inside of a range, CRT, all this is good. But again, goes back to the basics, time and price. What is that weekly candle aiming for? What was our objective? It was that daily PD array and reaching into the 50% of the previous week's range. That's it. That's all it is, bro. Next week, if this daily, it really just, again, we have to wait and see, honestly. I can't try to give the sauce or say what's going to happen because, again, I can be wrong. The market can completely do a 180 right here and just do a 180. But that was pretty much really it for today's trade. Honestly, beautiful day, beautiful PA until 10 o'clock. I wish 10 o'clock was better. 11 o'clock was really good. Pretty unfortunate, honestly. We didn't get the good PA. Then the market started. The bias was correct. That's all that matters to me. The bias, the narrative was correct. We were trading above. Again, anything above here, since we're trading, we're trying to have the bearish intention, was a premium short, which is good. Taking it slow, risking 1% per trade idea, aiming to pass it. I was gonna do a video challenge where I was basically trying to pass a prop firm in like 2 trades, but I realized I need to continue back testing and also probably pass my first prop firm and not do it for the videos. The videos are good. I will continue to try and upload better videos on the main channel. I'm not really trying to be consumed by the video creation and like make it entertaining where I'm not really a trader. I'm trying to be a trader too also. There's certain boundaries where I won't cross certain things like that. I want to make money trading also, not just from content and affiliates and all that. But yeah, that's pretty much really it for today's trade recap. Sauce, I've been watching or listening to ICT podcast on Twitter, his Twitter spaces basically. They're on Spotify. Someone uploaded them. I've been listening to those, building on my psychology really. So yeah, peace.